I think in 10 years from now, or 5 years from now even, it's going to be table stakes to be able to provide more of a holistic approach and at least be able to offer that. And if you can't do that in-house, you better be really good as an advisor having those referral relationships tied up so that you can still offer the service and make it seem like a seamless experience, even if you can't offer those services in-house.
Hey everybody, welcome back to another episode of The Connected Advisor. I'm your host, Kyle Van Pelt, co-founder at Milemarker, and today I am joined by Jimmy Lee. Jimmy is the CEO of the Wealth Consulting Group, and he is still trying to make three-pointers. Jimmy, thanks so much for joining the show.
Good to see you, bud.
Yeah, absolutely. Absolutely. As we're recording this, March Madness is in deep swing. So, I mean, the three-pointer intro is a great personal detail to have as we're all watching basketball and glued to the TV for that right now.
Yes, I'm not playing any competitive ball in leagues or anything, but I still go out to the gym once in a while and shoot hoops with some friends. And actually, I can shoot better now than I used to back in the day when I was playing a little bit more. So I don't know. I don't know what that means.
That's awesome. I love that, man. All right. So, Jimmy, I ask every guest the same first question. You're not going to be any different. So I've had hundreds of conversations on air and off air with people in this industry, and I've found everybody has a unique path to the space. Some people's path is traditional, like they followed family footsteps and this is how they got here. Other people didn't even know this industry existed and they came in the side door as a second career or whatever. But what I've found is whether your path is traditional or untraditional, everybody has what we call a money moment. And that's that moment in your life where the light bulb went off and you said, this is what I want to do for my career. This is how I want to spend my time. So for you, what was that money moment that led you to sitting in the chair that you're in right now, having this conversation with me?
Boy, I got to be honest with you. I'm not sure if I had one of those, but I know that at some point in college, I decided that I wanted to try to either go into investment banking or become a stockbroker. So I started in the 90s, graduating college and getting into this industry, which, back then, really, there were still stockbrokers, right? I would say the history of brokerage firms was still kind of like old school back then. And what we know today about being a fiduciary and fee-based and the original wrap accounts that wirehouses came out with and things like that, that was the time frame that I got into business. So at some point, I knew that I wanted to get into something to do with money. And my father actually ended up meeting with the banker randomly. And the banker was Korean, worked for Merrill Lynch, and I'm Korean. And my dad asked him if he would take a call for me, which the guy did, and told me the path of becoming a banker. And I just really wanted to get to work. And I didn't want to go to get an MBA and wait and then try to get a job on Wall Street. And I was ready to get into the business. So one of the two jobs I had at the time when I was finishing college was I was working at a private country club, and one of the members was a very, very successful financial advisor, stockbroker at a regional wirehouse. And what attracted me to wanting to be like him was that he was managing money, doing managed money, and he was not picking stocks and earning commissions and things like that, which attracted me. So he had, believe it or not, $1 billion of AUM, he said, back in the 90s, which was a lot, managed money. But the firm that he was with, I actually was interning for some college credits with another broker at the same firm when I was graduating, but they wouldn't hire trainees, right? Their annual trainee class was going to be in March. I graduated the summer before. I happened to be working as an intern for another broker in the same firm. And a buddy of mine that had graduated already from UNLV in finance was upstairs on the second floor of our building. And he got a job with Mass Mutual Financial Group because one of his friends was a manager over there. And so they came down and asked if I wanted to potentially join them and said, if you want to go work with the other guy in March when ready to hire, go for it. But why don't you get licensed with us? And for me, I was ready to get a real job, or at least be able to fake like I had a real job and put on my dad's ties. So I took the opportunity. So I started out with Mass Mutual in Las Vegas in the 90s, got licensed. And when I did get my first check from Mass Mutual was months later. And that's when I was able to quit my other jobs. And it was a pretty good check for some business, that a couple of different insurance deals risk management, simple life insurance, disability insurance type things that I was working on with my with my sales manager on. They all closed like at the same time, and it was a pretty good check. So I never looked back. So I didn't go work with the other person, and I started my career with Mass Mutual.
That's awesome. For somebody who said you might not have a money moment, it sounds like, there was kind of a cool couple of money moments put together to get you to where you're at. And that's a great story. So I know you're in Vegas and you've been there for a while. It sounds like it, definitely since at least the 90s, maybe even before that. I feel like that place has just completely undergone a complete transformation and has really changed and everything like that. I mean, what has it been like to be there through this kind of transformation of Vegas itself?
Yes. I mean, I've been a Las Vegas resident since being a young child, really. And Vegas continues to reinvent itself, through every real estate crisis or whatever. I think the game changer was professional sports. So when the Golden Knights came here and had an amazing first year here in town, a lot of locals got behind the team and bought season tickets, and the games are amazing. If you've ever been to a Knights game, it's like entertainment, just like you would expect from Vegas. And they went to the Stanley Cup that first year. And then since then, we've got the Raiders, we got the A's coming for baseball. And then we're probably going to get a NBA expansion team or something that at some point. There are talks about MLS being here. We have women's professional basketball here. Who knows if we'll end up with something else beyond that? I don't know. But we become a sports town for sure. And it's a natural for certain sports, right? I always figured NFL would do well here because there's not that many games. And of course, if you're an NFL fan and you can get on the road for your home team you want to root for on the road, Vegas is a nice destination. We have a nice indoor stadium. I'm a season ticket holder myself. But I think that also helped grow the business community beyond gaming, which is what our business community has always tried to do, is get beyond gaming. And so through COVID, we saw a resurgence of tech folks come to Vegas as well from the Bay Area. And sort of like the founder of Zappos, who's passed now, tried to do in downtown Las Vegas before. There's been a resurgence of that. There are incredible homes being built here in Las Vegas. I mean, incredible homes. Large homes, expensive homes, all throughout town. We have a Discovery Land golf community here called Summit. I didn't believe that the real estate prices out there could do what it has. It's been amazing. So Vegas is amazing. I also have a home in the south on the coast of Georgia, which is a completely different feel from here. So it's a nice break.
Yeah, that's totally different from Vegas. That's amazing. Yeah, unbelievable transformation. And I think you bringing up COVID was amazing because I think that was a catalyst for so many different things. But I have truly been shocked at the way they've rallied around the sports teams too. I mean, like you said, I think football makes sense and all of that. And then you guys just had Formula One there, which is a huge hit, it sounded like as well, which is crazy. Last time I was in town, they were taking down all of the grandstands and everything. I mean, right there on the strip, like right outside the Bellagio fountains, you had cars going 200 miles an hour through there, which is crazy to think about.
Yeah, it's wild. I didn't go this last year. I was out of town for the event, but the first year I went, and I think F1, I heard that it's a 10-year project, and F1 owns the Vegas race. And so they invested a lot into it. So did the city, with tons of traffic. I mean, created lots of traffic with a lot of the construction going on. And I know it was not great for a lot of the people that work on the strip or near the strip. But that being said, I think F1 was a little bit too aggressive on pricing. They went out there. And so I don't know to what level of success the owners really feel about that or not. I haven't researched it enough. But certainly we become this incredible sports mecca right now.
Yeah.
And F1 with its standing, who knows? And I've heard that there's LIV wants to do a tournament here. They've been wanting to do that for a while. So yeah, sports has definitely been a big thing in Vegas for a while.
That's amazing. I love it. All right, let's come back to RIA space. So one of the recurring themes in this industry is the debate on fee compression versus increased services, right? Did fees actually get compressed? Or did they kind of synthetically get some, compressed by, there's still 100 basis points for the sake of this discussion, but you have to provide so much more. So you had service expansion versus actual fee compression. You've taken a hard stance on increased services. So to anyone who goes to your site, they'll see something that says our mission is to serve as our client's CFO and most trusted advisor. How would you define being a client's CFO and fitting into this discussion of fee compression versus increased services?
Kyle, analogy I've used for years in talking to people is that if you were the CEO of a big company, you'd have a CFO on your team, making sure that financial objectives were being met every quarter or whatever. And with people that have a lot of assets or more complexity with their wealth, there are a lot of moving parts and family dynamics. And having a firm or an individual and a team that can help organize the financial life for that individual or family, I think is critical. So imagine anything to do with money, we as advisors are trying to get in the middle of. And for me, on the portfolio management side, I've often said to people, including my own clients, if you're working with a top tier of investment professionals that are free of conflict, looking out for your best interests, have access to institutional products, certain alternative asset classes, et cetera, then the portfolio to me is a commodity. You can get that a lot of places. So to me, where the alpha truly is one, if how good can we help a client manage their own investment behaviors when it comes to the portfolio, but really it's around everything else, around the financial planning, which we can charge for, but sometimes the majority of the value can come from things that we don't earn any specific dollars attached to. So coordinating meetings with tax professionals, trust attorneys, maybe bankers. These are all things that I think a personal CFO can do for their client, for the higher net worth client, and make the client feel much more in control, and that the advisors are more coordinated in what their goals are. And so that everybody's on the same page too as advisors. And I think we as a financial advisor sit in a unique opportunity here. A lot of times, people say the CPA is in the power position with the clients. Well, they may be for business owners that are actively working with the CPA a lot, but you don't typically see the CPAs even in that scenario necessarily dealing with the client's investments or other things that are more family-oriented issues that we get into, right? So we're in a unique position, I think, to serve that role for people that need it. Even for people that don't have that much money, having things coordinated in their financial life is important. I mean, we just had a friend of ours recently, who in the 40s passed with leaving behind a wife and 2 kids, and the guy was in charge of everything, anything to do with money or anything. Successful business owner, a great family, but the spouse really is not knowledgeable about anything when it comes to that. So just being able to provide comfort and peace of mind in that scenario, but also to be able to kind of be able to talk about all aspects of their financial life, whether it's risk management, insurance, estate planning. These are all things that happen when, that need to be, you need to talk about, right, when somebody dies. But just how accounts are being titled. Advisors aren't paid directly, right, for making sure that accounts are titled properly. But boy, we can add a lot of value. And certain clients might not see a whole lot of value in that. But you realize there's a lot of value when somebody dies unexpectedly.
Oh, yeah. As somebody who went through something similar recently where, I thought I had filled out some paperwork appropriately and, I work in this industry, right? I have a fair amount of knowledge and understanding. It turns out I did not fill out the paperwork appropriately and my advisor handled that. They helped in a big way. So you're totally right. Sometimes those aren't the things that you would think of when it comes to an engagement with an advisor, but it can be one of the really big value adds of a relationship between you and a client.
And I really believe that the best financial advisors, that's what they already do for their clients, is that they're getting, obviously there's a lot of knowledge back and forth in terms of what the individual or family situation is. As you probably know, working with advisors, that sometimes we find out things about their personal lives sooner than other very close family members do. And so there's an intimacy and trust that's built with, advisor-client relationships. If the advisor is especially doing a really good job of helping clients identify what their goals are, what's important to them, most important to them about their money, and then really truly being a catalyst for getting all those things done, right?
Yeah.
So the personal CFO concept to me is the catalyst proactively helping clients accomplish their financial goals. And a lot of times it's not about the portfolio.
I like that. You touched on this a little bit with what you were saying, but when I hear CFO, I kind of think helping deal with complexity, things like that. And for better or for worse, when I think about complexity, I think of high net worth or ultra high net worth, right? And maybe they're using a multifamily office or a family office. How would you differentiate being a client CFO from being a multifamily office or one of these things that feels, really only exclusively for high net worth or ultra high net worth clients?
I think a lot of financial advisors, our goal is for our clients to call us about any issue regarding their money or financial situation, whether it's something that we can directly handle or not. But us being knowledgeable about other areas of finance, we can then maybe, connect them with people that can help them with the issues, whether it's risk management related or if it's something else completely different. So I think a lot of advisors want to provide that service. Sometimes they don't. Sometimes they just want to get paid the 1% to manage a portfolio. And the way that their value prop is for performance. Now, that's not the way that I was trained, nor do I believe is the best way to work with clients, because we can't necessarily control performance, right? We can control other things with the portfolio, but not necessarily the performance. And so anyway, that being said, I think that advisors that do a really good job do help clients think about other ways. And it does look a lot like a family office structure, except that a family office might have a lot of the services in-house, right? Potentially. Or somebody that is employed directly for the family doing certain things. And I'm not necessarily saying that financial advisors should be coordinating who's walking the dog when the client's out of town and things like that. But there are definitely things that we can do, or we do already, that's around money or issues related to money.
Yeah, I like that. That's cool, because I think that is the best advisors are in that seat that you're talking about. And those are, I would argue too, are the stickiest advisors, right? So a lot of the people listening to this are trying to figure out, okay, how do I get that next generation of client? They're, everybody's talking about the wealth transfer. They've been talking about that forever, all of these things. But yet, so little behavior change on, I'm just going to do asset allocation. Maybe I'll do some planning for the parents. And then, here's hoping that the kids are going to still want to work with me. But if you're actually in that CFO seat, if you're helping solve problems, if you're helping those kids maybe think about getting a first mortgage or deal with money questions before they actually have wealth and all of those types of things, it feels like you're in a much stickier place to be that trusted advisor for a long time.
I think that's the goal, right? I think too much time is wasted and spent in the advisor space that I'm in on portfolio management and product selection and market timing. There's things that we can't necessarily always control the best of and or have any control of. And I think more time should be spent on the planning side of things and helping clients with helping themselves manage their behavior so they can become better investors over time.
So when I think about the amount of service that you're talking about, I mean, that's great, right? As somebody who sits in the client seat, you're like, yeah, that sounds amazing. But then when I talk to a lot of other owners and business owners in this space or other spaces, everybody's trying to figure out how to scale, right? So how do you offer such a broad range of services, but then think about scale at the same token? Is it just, hey, each person can reasonably only serve X amount of households really well with this level of service, and we've just got to bring on another CFO or advisor for every X number of households? Or are you using technology to scale this? But how do you try and blend those two things? Because it's candidly easier to scale, get 1%, asset allocation, planning, boom, go. I can manage tons and tons of households. I take calls when I need to. But I think about those as kind of a seesaw there of the amount of service you're providing versus the desire to scale. How would you think about that?
So I think it has to be almost all of the above. So I think it's a combination of using technology. And then, I think for a long time, we in our industry have been able to get away with getting paid just to manage the money, right? And I think that's going to change a little bit. As we see consolidation in the industry, both at the institutional level as well as at the individual advisor level, it does look like there are going to be some, really big firms out there. And you're seeing the news on acquisitions and mergers at the broker-dealer space, as well as at the individual and RIA space that we're in. And ultimately, I think that clients will end up with a more consistent customer-client experience, because I think these firms that are bigger are going to be better at executing, in some cases or in most cases, what the client experience looks like, right? Whether it's portfolio performance, updated financial plans on a consistent basis, et cetera. That being said, I think what the landscape could look like 10, 20 years on the road is that no longer will it be okay just to do portfolio management, but it's table stakes to be able to provide tax planning or tax returns, trust planning or trust documents and things like that are, I believe, two areas, tax and trust and estates, that AI is disrupting as we speak. So we've decided to implement wealth.com for the trust and estates. We're working with another company called April for the tax prep and planning. And, so firms like ours that are decent size that have never really gotten into offering tax returns for clients or really getting too involved in the trust and estates consulting and or offerings like that. We're getting into it. And those two firms that I'm talking about right now definitely are using AI, and it's going to disrupt the attorneys that are doing the basic estate plans. It's going to disrupt the tax return CPA or enrolled agents that are doing basic tax returns, because people like us are going to be able to compete for that and offer those services. And maybe just like the banks have been doing for years, trying to use lending and other ways to be a one-stop shop, I think there's going to be a lot of other intermediaries out there offering services that technology is really disrupting. So until the time where an investor with information and technology can still not panic and hit the sell button when the market goes down, I guess we'll be in business on our end. But to some degree, I think that AI is going to definitely make an impact on what financial advisors end up looking like and doing for their clients as well.
Yeah, that's a great answer. Because I think that, I look at businesses even outside of our space. I look at businesses like McKinsey or BCG or things like that, where, these are services businesses, right? And they're trying to provide a depth of service. And the way that they've scaled is just through lots and lots and lots of people, right? Absolutely incredible pipelines, recruiting out of colleges and things like that and all of those. Or you can have a boutique service company, where it's like, hey, I'm inherently going to be, but I really do think that technology is now creating the ability to do white glove service at scale and offer a bunch of different things. And you are just that point person, that relational quarterback, things like that, to make sure that all of those things are happening and know what it is. Because I've talked to a handful of people about this, and I'd love to hear you chat about this too. But it's always felt very strange to me that a person would find an advisor that they trust enough to share all of their hopes, fears, dreams, insecurities, all of that stuff. It's a lot to open up and be vulnerable to an advisor about all of these things. And then the advisor's like, okay, great. Well, you need to go get a will and all of that type of stuff, and you have to handle these things. And it's like, okay, can you do that for me? No, you got to go share all of these vulnerabilities and all of these things with another person, this estate attorney that I'm going to refer you to. And, you kind of get bounced around. And I think that's always just been an interesting challenge in this space. So it's cool to hear you riff on how that works.
Yeah. And I think these are things that I think we as advisors have been trying to do for years. It's just, I think with technology and companies out there that can provide now resources for us to be able to execute better at the client level, where we meet with the clients, I think that's going to be a game changer for a lot of advisors that are proactive at adopting some of the new technologies. Now, the other thing too, Kyle, is not too many advisors, I'm not sure, are willing to want to work that much harder for the same fee. But to me, I think, again, it's something that's going to become table stakes for the better, bigger clients. And, I was just at a conference where I think it was Michael Kitces was on stage talking about the number of people that are at certain segments, right? Whether it's high net worth or ultra high net worth. And everybody's going after that $1 million plus type client, $1 to $10 million, let's say. There's not that many of those people. And so I think, again, for those types of relationships, it's going to be table stakes to be holistic. So our objective over the next 5-10 years is, how do we differentiate in that environment? How do we become better than some of the big firms that are already $100 billion or $50 billion in size, or larger institutions that have it sort of institutionalized at the corporate level? I think that, in my opinion, I'm a little bit biased, but firms like ours that are not large corporations with a lot of bureaucracy, publicly traded, those kinds of things, I think we'll be able to execute maybe a little bit more like a boutique firm can, even with scale. But you need to have some scale. You need to have dollars behind your firm in order to be able to solve for some of these issues and have the resources. Because I don't think one person is going to be successful at doing that on their own. So I love what's going on with the technology and advances in technology with fintech and some of the things we talked about already. But I'm sure that a lot of those are going to hit the portfolio management space as well, which we're already talking with some folks that have interesting strategies. Again, I think that's a commodity-based kind of a thing, but for certain clients that need tax mitigation or other things like that, there are some investment strategies that are very unique that tech's enabling to occur.
Yeah, that's great. So I know you talked about how you guys have brought on wealth.com and you brought on April, and you were able to go and find those partners to help you expand your services. And I wanted to ask you a little bit about the Kitces map has grown from, it was like 180 companies in 2021 to now it's like 450 companies on that map. And I think there's going to be even more. your full-time job is not to evaluate and look at technology and, all of these types of things. So how do you kind of stay on top of what's going on in the space and make sure that you guys are using the tools that make the most sense for you without that just becoming this overwhelming exercise of always seeing what the new shiny object is and always seeing what the new thing is as that map just grows and grows and grows and grows?
It's mind-numbing how much optionality there is. But one of the things, Kyle, that I've always thought about, I worked with companies over the years of my career that had unlimited dollar resources, but they were in the financial services space. And because they had a lot of resources financially and people-wise, they would try to create their own products, even though they weren't necessarily, that's what they did for a living, right? They might have manufactured other products, really. And so whenever I've seen that happen, they're always late with the delivery on whatever they're creating. And then it's like old. By the time they roll it out, it's like already old. So I've always been a fan of early adoption, identifying technologies or emerging trends early and trying to be an early adopter versus necessarily being like an innovator at our level, that is, with the resources that we have. But look for innovators that are going to, become the dominant market players earlier on. And so you need to be aware, I think, from a team perspective of what's going on and attend to conferences where the innovators are presenting, talk to people that are wanting to do the same things you are or have already gone down that road, ask them about their experiences with the providers out there. And then our goal, actually, and one of the big differentiators for us is, it's unfortunate, but in my opinion, a lot of even what the industry would consider, successful advisors from a money standpoint, they're earning a good amount of money with their clientele and everything. Even experienced advisors have a real big challenge figuring out what best practices are, whether it's tech stack, whether it's how they service their clients, how they market to their clients, what their own succession planning is or isn't. We're trying to figure out how we can help them get from where they're at, even if they're fairly successful earning income, and do a pretty good job of managing their clients, but to a best practice state. That's our goal, working with both independent advisors that are affiliated with us and also advisors that are going to be part of our firm as partners and things like that. So we're very interested in, and that's our goal, is how do we help create a platform, a company that at the end of the day, we all want to, in retirement, give our money to our firm to manage, have a sharp CFP type individual updating our own financial plans on a very proactive basis. And it's a one-stop shopping experience. If I have a question around my trust and taxes, estate planning, business succession, whatever, I can go to my financial advisor and that person's able to provide feedback, good feedback, and I don't have to go somewhere else. That's the goal. And then also have a great digital experience, right? So if I don't want to call the advisor, and this, as money transfers from the generation that has it now, the baby boomers and older, to the next generation, a lot of those folks that are younger, millennials and younger, don't even want to talk to their clients, advisors that much, like their parents might have, or parents, right? So you got to have a great digital experience for them, but also be able to communicate belly to belly if somebody wants to go to your office and do that.
Yeah, well said, man. So you talked about building a platform, and I think that's a great segue into, one of the things I wanted to talk to you about is one of the ways that you've grown the Wealth Consulting Group is through bringing advisors on by creating this platform and growing through not even necessarily acquisition, but partnership, if you will, and maybe a little bit of both. But one of the things that you guys started out on is you were initially pursuing advisors that might be coming into retirement, and maybe you were trying to be their succession plan or acquire their book. But it sounds like you've found trying to partner with advisors who have a longer runway seems to be a better strategy, or at least a different strategy. So is that a both? Are you trying to be the succession plan for advisors retiring and get people who are still in growth mode? Or have you kind of pivoted one of those and focusing on a specific type of advisor?
No, both. But 10 and a half years ago when the RIA was started, ever since I got into business that long ago, people have been talking about this great wealth transfer, right?
Yeah.
Which is basically because of demographics, where the money is and how old people are. I heard the same thing. And even 10 and a half years ago, they were talking about how acquisitions are going to be so important and so forth. And they have been. You've seen a lot of M&A activity, whether it's because the advisor is aging out or not. I'm not sure. It's actually not, I don't think. But certainly what's happened is, and when we started the RIA 10 and a half years ago, we learned that the platform that we have in place appeals to a lot of independent advisors that are out there doing their stuff on their own. So if you're an advisor on your own, successful advisor, but want a back office partner, and it's not going to hurt your economics, at your own firm for your own personal profit and P&L, that's where we stepped in. So we found that there's a lot of independent advisors that want a back office partner to help support them with their financial planning efforts. I don't think a lot of advisors do a very good job of that, honestly. That we might do a decent job up front of doing some planning to capture the client relationship. But then after that, maybe it's more of an update and not necessarily a formal financial planning process updating every single year kind of a deal. So whether it's that or portfolio management, a lot of independent advisors, if you're coming out of a wirehouse and you're working with your bigger clients using SMAs and UMAs, or you're an independent advisor and maybe you gravitated from using outsourced third-party money management when you were new in the business to now you're managing your own accounts. For your larger client relationships, if you want them in a good tax-efficient portfolio that's low cost, it might look like an SMA UMA to some degree. Those are very expensive for individual advisors to get in the independent world. And so we've created SMAs, UMAs in our own firm at a fraction of the industry cost for those independent advisors to use. And that's been a big part of our success story, is that advisors want that, right, for their clients. They want individual stocks. They want flexibility around a model portfolio without having to just sell everything and go to cash. And they don't want to pay 50 basis points or 60 or 70 basis points to a third party to do it, because they know that for a larger account, they have to be fee sensitive, and they don't want the lion's share of the fee that they charge to go out the door to a third party. So in essence, a lot of independent advisors are managing their own models using funds and that are not as tax efficient or other things, and just not as competitive. And really those clients are at risk to a competitor in a market downturn or whatever for the structure of the portfolio not being optimal. So, and maybe cost being too high. So we're able to solve for that. And then we also have brokerage services for risk management that we offer in-house, so that they don't have to go try to do it themselves or outsource that to some third party. And then we try to help people with their practice management. Like I said earlier about best practices, we have that kind of in-house. A lot of independent advisors don't know what tech stack to use for their CRM, financial planning, portfolio review and proposals, client reporting. We think we've got best practices for all those things. And then client segmentation. How do you work with a client? What's a good idea around what that could look like? And what are the best marketing techniques for return on your money or time? All those types of things. We're one of some firms, I'm sure, that do a good job of helping advisors that are affiliated with them trying to implement some of those things.
This podcast is brought to you by Turncast. We make game-changing content for fintech and financial services companies. Learn more at turncast.com.
Hey, this is Judd Mackerel. Thanks for listening to this show. I just wanted to ask you one question. What's your technology and data strategy for 2025? If you can't clearly answer that question, I'd love to talk. We are spending some specific time with select firms to really go deep and help you clearly answer that question. We believe that it's one of the things that often holds back firms from really achieving their potential, from really achieving growth, and really getting a lot of the things in the position that they need to be. The things that are holding up the way that you scale, like your workflows, how you manage data around your revenue, how you report all of that to your advisors, and getting clarity in all those things. I'm sure there's a lot of very specific things to your business that are really important as well, and we'd love to talk about that. If this is interesting to you, hit me up with an email. My direct email is judd@milemarker.co, and I'd love to hear from you, hear what you're working on, hear what your strategy is, and see if there's an opportunity for us to help you get more clear on that strategy in 2025. Thanks.
Well, I love that you have the brokerage solutions for risk management. I feel like that's staying true to the roots of where you started. You're bringing that full circle to the platform for your advisors, which is cool. So this question is something that I always love to ask people like you, but you made that transition from being an advisor who's running a book of business, and maybe you still are today, to kind of being the CEO and business owner of a platform, right? And I think that is just such a pivotal moment, and a lot of advisors or people who own RIA spaces, you kind of have to make this decision at a certain point. Am I going to be an advisor and just manage all of these client relationships and run my business that way? Or am I going to become, the owner and CEO of a business and kind of have to, it sounds bad to say this, but leave the advisor aspect behind, give that to other people so that I can treat advisors like my clients? And that always seems like this really difficult transition for people. It seems like maybe you've done that pretty smoothly. What do you think it took to be successful in that transition?
I think that depends for each individual and what their goals are for themselves and what they really love to do. So I always talk to other advisors around, what is it that you really love to do? What's your genius? What are you really good at? What gives you energy? And if we can help people spend 80% of their time in that space, that's awesome. And so for me, one of the things I was fortunate to do was to get involved early on with coaches in our industry, people that are really good at building businesses in the financial advisory space also. And I've always loved being a financial advisor. So until I retire and fully get out of this business, I'm always going to have some clients to work with, I believe. But what I've done is I was taught to have associate advisors work with the less complicated clients and or just have other advisors on the team so you can leverage time, right? There's only so much time that we all have. Yep. And so that's what I've been able to do, is to have other advisors that are on my team working with other clients that, maybe were the clients of mine that I brought in years ago, right? So we have a team concept, which is very common amongst advisor teams. And so I don't handle that many relationships from that perspective as a lead advisor for clients, but I love it. I still like to do it. I get energy from working with other financial advisors if they're looking for me to help give them information or provide them input or even coaching them to some degree or mentoring. I love that. From running a firm, it's a different hat, right? It's a different skill set. It's more about being an entrepreneur, but also being good at running a business. And not necessarily everybody wants to do that. So there are certain people that are in our business that are amazing CFPs, amazing financial planners and financial advisors, but are like just horrible business owners. So they hate HR. They have a difficulty hiring people and keeping people. They don't have great systems and processes in place, right? So just depending on who it is you are and what you love to do, I love doing both. And so I love being an entrepreneur. I love building businesses. I get a lot of energy from talking to other financial advisors or other business owner clients or whoever about business type things. But I also love being a financial advisor. And it's fascinating when I listen to like a Peter Mallouk, who owns Creative Planning, and he says he's still a financial advisor, and the size of that firm and how fast that firm has grown is amazing, that he can also do that at the size of his firm. So I guess it's possible. So that's kind of what I would say about that. But it's two different things, or two different skill sets, two different jobs, right? That when you put the business owner hat on.
Yeah, totally. I love to hear that. I think I even hear it in your voice, when you talk to people, it's like they got into this business to serve clients, and then you have a lot of success and you see this opportunity in front of you to not only serve clients, but to serve advisors. But it's so hard for so many people to give up the serving clients completely, because that's really what got you here. It's a special thing. And this is one of the reasons why I think a lot of financial advisors, it's such a noble profession, because people can say what they want. And I'm sure there's bad actors just like there is in anything. But most of the advisors I know truly, truly care about their clients, and they don't want to give that up. And I think that's pretty great.
I think for the most part, just like any industry, the majority, if not, extremely high percentage of people who are in this business as financial advisors really do care about their client relationships. But I think at the end of the day, for a lot of advisors, once they get to retirement age, they've been in the business several decades, I'm not sure necessarily everybody gets a thrill out of doing a client annual review or whatever you want to call that process. Strategic tactical meeting is what we try to call those. But I think it's a lot of times it's around the clients that they serve. Again, every is different. Every financial advisor is different to some degree, and what makes them tick might be a little bit different. But I think for the most part, a lot of people that love the profession as a financial advisor, they still like that involvement to some degree. Maybe it's not as busy as they were when they were younger and building the business. That's all.
Yeah, I like it. All right, I want to move to a segment of the show where I'm going to ask you to get out your crystal ball, look into the future a little bit, and tell us some of the things that you think are coming down the road that you're preparing the firm for and that others should be paying attention to. So what are some trends you see happening in the space and in the industry that you are positioning WCG for today?
I think the biggest trend, it's not difficult to see, and it's something that people have been talking about for years, and actually we're seeing a lot of it right now, which is the whole consolidation and the mergers and acquisitions activity and the business succession conversations that are going on. And I think there's a lot of things going on, right? There's a lot of private equity money coming into our space, or has been, and more coming in. There are large firms that are consolidating, at the institutional level. But a lot of it, I think, is because of the demographics of the financial advisor, right? The financial advisor being close to 60 years old, the average financial advisor, looking at retirement. I think all of that plays into why we're seeing some of this consolidation and a lot of this M&A type activity. And so I think, I know that the biggest risk that most financial advisors face financially is them dying too soon or suddenly. Seriously, just like it is for a lot of people.
Yeah.
But if you're in a partnership deal, like we have some in our own firm that they have buy sells and they've been friends forever and work in the same offices forever, but they're older now. And if one of them passes, they have a buy sell agreement, but they could back out of it. And some advisors that are working 20 hours a week now that are 63 years old that have a buy sell agreement with their partner that's the same age, they're not necessarily going to want to like take out a huge loan at 10% today, put down 30% in cash to go buy their partner's business and work, an extra 40 hours a week.
Yeah.
They just don't want to do that. They don't need to do that. Even buy sell agreements amongst those types of people, office mates or people that live in the same town or whatever, are just not going to work. Also, because valuations have gone up, a lot of founder advisors always thought they would just give the business and self-finance it to their kids, get them in the business or to somebody else in the office, associate advisor or whatever. But the numbers have gotten so large that, again, because of valuations, I think that's become more difficult to accomplish. And then sellers don't necessarily want to, jeopardize their entire net worth, or not the entire net worth, but a large chunk of their net worth, and their own retirement to people that necessarily didn't grow it with them, a service type advisor. And so there's a lot of challenges to that. So to me, that's one of the reasons that we're seeing so much activity, is that because of the age of the advisor, demographics, and the valuations going higher, and interest in our space from outside actors that weren't there before has caused a lot more activity to go up. So that trend is not going to stop. Now, that being said, I think we're still in the early innings, as my friend Dan Ives talks about. Yeah, I do. As I was saying, Dan Ives talks about AI being the early innings of the AI revolution. Whether he's right or not, we'll see. But I still think we're in the early innings of the M&A deal and advisor succession, because there's so many thousands and thousands of advisors that are not ready to retire just yet. I think we have several decades to get through the succession from one founder advisor to the next. And by that time, there probably will be less firms out there, and the firms might look a little bit differently, right? Because think about how many wirehouses and banks that were offering these services were not too long ago, and now it's just a handful of name brand firms at that level. But now you're starting to see RIA firms that didn't even exist a few years ago, and you look up and they got $5 billion of assets under management, and they weren't even around 5 years ago. So I think that's going to continue to boom, the RIA space. And I think more advisors are going to give up their FINRA registrations and go RIA only. So I think one of the trends to identify or to participate in is if you can evolve from an advisor that's FINRA registered to a non-FINRA registered, and then selling your business someday to a successor advisor, and do it without disruption to your client, without having to repaper and things like that. Those are things I think advisors should be looking out for.
Yeah.
Other than that, I think the whole idea of a one-stop shopping experience is going to become table stakes if you want the $1 million plus client and you want to charge 1%. So if you're not there now, and you're not going to build that, then you should hope that whoever purchases your practice later on will build that so that your clients don't leave them. I think in 10 years from now, or 5 years from now even, it's going to be table stakes to be able to provide more of a holistic approach and at least be able to offer that. And if you can't do that in-house, you better be really good as an advisor having those referral relationships tied up so that you can still offer the service and make it seem like a seamless experience, even if you can't offer those services in-house.
That's great. Great answer. That's really interesting because, I think it's hard to envision it being early innings on M&A when I feel like every week there's just headline after headline after headline. And then even too, this week, as you and I are recording, it's announced that LPL is going to buy Commonwealth. And maybe that fits, by the way, into your idea that people are going to drop their FINRA and all of that stuff. And maybe there's people who are kind of wanting to get out of that business or something along those lines. But that's a massive transaction. And then you're seeing all these other ones. It just feels like M&A is so hot right now, even as money is no longer free. I mean, it made sense when money was free to see all these acquisitions, but they're just going and going and going. And it's crazy to think about it, continuing to ramp up.
We're affiliated with LPL, and LPL is a phenomenal firm. I had a meeting with the leadership of that firm, and their goal is to be much bigger than they are now, even after this acquisition. and it's to be number one in the space, not just in headcount, but in assets under management. And so, and I think they'll get there. So what does that mean? That means that firms like Commonwealth may not exist. I mean, I think a big part of what happened there was just estate planning for the majority owner, the big owner, right? And so that being said, I think there are other players in this space. And the big, I don't know, it's a fear. So if you're talking about fee compression, the big fear would be, for me, would be like a company like Amazon coming in and buying like a Charles Schwab and some big RIA firms or things like that, and then just trying to dominate the marketplace through fee compression or through margin competition, I guess. Whether a hyperscaler or tech company decides to go consumer oriented into wealth management, who knows? But obviously they've got the dollars to make a big move fast. And if they wanted to get real big market share, and the government allows that. So anyway, who knows what's going to look like? And then also, like, trends wise, how will AI really impact our space in the sense of not tools that we can use? And what I've heard everybody talk about that are experts on AI and financial advice is that the financial advisor will always be around giving financial advice, like I said, until maybe the day that a human being doesn't panic and sell their portfolio or make adjustments when the market's down. If tech ever were able to do that on a mass scale, I don't know. I'm hoping that from what I hear, from what the experts say, is that the human element and the trust part of the human element accomplishes what it always has for client relationships, and we can continue to be in business and be a profitable business industry with the fees that we charge. But even I've said this now multiple times to my team members that I want to buy a humanoid. So I'm going to have to do it because I've said it too many times. And we want to try to program it to see if it can replicate what the financial advisor does. And, imagine like a humanoid that has the EQ of an Oprah Winfrey with the mind of a, financial Harvard professor or something like that, or portfolio manager. And then can they interface with clients the way that humans can? To what degree? Who knows? I hope not is the answer. But
I don't think any of us know what's going to happen, but I continue to be bullish. And I feel like I say this almost every episode now, but I continue to be bullish that when AI takes away all of the tedious stuff, and when you have agents that are doing all the paperwork and all of that type of stuff, but when AI is also creating so much noise from content and fraud from all of the other things that it's doing and all of those, that humans are just going to deeply desire authentic interactions with other humans, whether it is optimized or not. I think we will desire in person, and we will desire experiential, and we will desire authenticity, because it's going to be so hard to be able to tell, what's real or what's not.
That's where my bet is. My bet's on that. And that actually, even, once you get beyond the baby boomer generation, who I believe would love to look at their portfolio often during retirement, I don't think the generations underneath them really want to do that as much. And so I don't think they want to have as much control as maybe some of the older clients that we're used to dealing with. And so I think, when the successor advisors and generation 2 advisors take over the founder businesses, I think that the client relationship is going to look a little bit different. And, I don't think that the idea of paying a 1% fee to someone that can handle a lot of different things is going to sound expensive whatsoever. So anyway, I guess that being said, I'm hopeful as well that our industry is continuing to grow. And that from what I understand, according to McKinsey, I don't know what the time frame was, that this industry at some point is going to be short about 100,000 financial advisors.
Yeah.
In terms of what the need is, right, for the people that want advice and from a human being.
Yeah, that is crazy to me too, by the way. I mean, maybe AI is going to help a ton on that. But, when you look at the trends of people searching for financial advice, the demographics who will need financial advice, and then the number of planners who are available to provide it, I mean, those graphs do not match. And so we're going to have to figure out how to solve the supply issue of quality financial advice and planning to meet the demand that is going to come, certainly.
And on that, and just one quick comment is, I think we're going to see a lot more women advisors in our business. Our industry, as a financial advisor, it's well suited, working from home now a lot for working mothers.
Yeah.
And, I think we'll see a lot more females in finance because of that, I hope. So anyhow, hopefully that'll help as well.
That's awesome. All right, Jimmy, we're going to move into the final segment of the show, which is what we call the Milemarker Minute. It's a series of lightning round questions, a little bit more lighthearted, to get to know you a little bit better and have some fun here at the end. So are you ready for the Milemarker Minute?
Sure.
All right. If you could travel anywhere in the world you've never traveled to before, where would you go?
Oh, wow. Probably like Bali.
Okay, good answer. I like that. Where would you find a more eclectic group of characters? A weekend night on the Las Vegas Strip or in the office of a 90s regional wirehouse?
That's a difficult question, but I'm going to go 90s regional wirehouse for sure.
I like it. What is the best flavor of ice cream?
Mint.
Mint. Okay, I like it. A young wealth management professional gets his foot in the door at a regional wirehouse. They have a couple of deals that come together and close at the same time, and they get a big check, and they immediately want to go buy a new convertible. What do you tell that person?
Well, that's what I did. With that first big commission check from Mass Mutual, I bought a convertible Alfa Romeo, but it was used and it wasn't that expensive. So what do I tell myself in hindsight? It wasn't that bad of a purchase. I bought it cash. But anyhow, yeah, save your money, invest in your business. Probably, you get a brand new convertible later that's bigger and better.
I love it. I love it. All right. You have a huge win personally or professionally, and you are going to celebrate with a meal with loved ones. What is that meal that you're going to have to celebrate a big win in your life?
Stone crab claws.
Yep.
Some type of Korean soup. And maybe some amazing Italian sauce on some pasta.
I love it. That's a great meal right there. A couple of courses going around the world. All right, Jimmy, what is the best book you've read or listened to in the last year?
I don't know, Kyle, you're too young, but do you know a guy, an industry legend, Nick Murray?
I don't. That's a new one for me.
You need to look him up. Look him up. Look up the podcast he did with Josh Brown on Josh's Financial Advisor podcast. It was an inaugural episode. I don't know if they're still doing that or not, but Nick Murray is a legend in our business. So if you're an advisor my age or older, you'll know who he is. And I read his book, the 25th edition of Simple Wealth, Inevitable Wealth. It is such a phenomenal book. I would really encourage you to read it. And I read it. I read one of the first books that he wrote, Nick Murray, called Serious Money, just like a year or two in the business. It changed, it formed, how I view what the financial advisor role was or is. It hasn't changed. And then when he wrote the Excellent Investment Advisor, I think that was copywritten in 1996. I actually asked Nick to participate in a conference call series with our firm back then, and he agreed.
Oh, wow.
27 years later, Nick's going to be talking this week on Saturday to all of our advisors at our annual conference. So Simple Wealth, Inevitable Wealth, 25th Anniversary Edition is a phenomenal book. And one of the quotes he has in the book is the timelessness of truth. And the things he talked about back then are so relevant today and have been true for 30 years, 25 years.
Oh, that's great. All right, we're going to put that in the show notes. Simple Wealth, Inevitable Wealth. All right, final question for you. As a Las Vegas Raiders season ticket holder, upcoming season, do you think the Raiders will have a winning record or not?
I got to say yes.
I love it. The optimism of a fan. That's fantastic, man. Well, Jimmy, this conversation has been incredible for me. I've learned a lot personally, and I think you've dropped a bunch of insights about what it takes to grow a firm and managing all of the challenges of finding and installing new technology, about offering all of the services that you do to your clients and making sure that your firm is well positioned for all of the stuff that's happening in the future as the ground shifts beneath our feet. So thanks so much for taking the time out to come on the show and share all of your insights and wisdom.
Thanks, Kyle. Good to see you.
Absolutely. All right, everybody, that's been another episode of The Connected Advisor. Please make sure you click follow or subscribe wherever you're watching or listening to this. And if you'd be kind enough, leave a review so that more people can find great conversations like this one with Jimmy. But until next time, enjoy every mile.